All right, guys. Hope you had a great weekend. Let's just dive right into it. The week ahead. Starting off with RKT Rocket Lending. Looking pretty interesting over here after we had a massive short squeeze a couple weeks back where it popped up to 42.50 and change in one day. We saw a nice pullback down to the 25 area. we've been consolidating in this area now, and I do expect a push up back to 35 to 40 area in the next few months. Obviously, with high short interest here, it could push up much faster if we do get a short squeeze. And the company is still doing a $1 billion buyback in the next month or so. We don't know when it's going to happen, but when that happens, that could be a catalyst for the short squeeze, possibly, right? I'm not playing it based on the thesis of a short squeeze, but I like it fundamentally. I mean, they're a very profitable company. They issued a nice one-time dividend last quarter. It's actually payable, I think, in a couple of weeks for people that held as of Monday. And if they keep doing that going forward, quarter by quarter, that will be a very appealing position to take for dividend investors that want to hang on to a stock, which will decrease the volatility in RKT overall. But right now, the IV is very high. So we traded in this range for the past year of about, between 20 or so on the downside and the upside of about 25, right? This tight range for the past year or so. And only recently did we actually break above it and hit new all-time highs on that short squeeze. Obviously, it was short-lived, came back down again, hit a low of around 23 and change, and now we're back at 25 and change, right? So a nice position to take right now is to look at the covered calls. So as I mentioned, I like this longer term because it has high implied volatility. There's a lot of premium to be had. So just as as an example, right? Going 2 weeks out, looking about 10 bucks out of the money right now, you can get roughly 50 cents per contract for a couple weeks out, right? If you go a month out to April 16th, again, $10 out of the money, you're getting about $1.50 per contract on covered calls, right? So if you're to buy the stock at 25 right now and sell a covered call for a month out and pull in $1.50, that's $1.50 over 25, you're pulling in about 6% return in 1 month. That's not bad at all, right? And that would reduce your cost basis down from 25 down to around 23.50, right? Now let's analyze the expected move for the next month, because again, week by week, it's not very interesting to look at, but a month out, looking at the expected move, we can see that the market's expecting it to move about $7 in another direction, right? So either from the current price up to around 32, 33 area, or down to around 19. Now, given that they had a phenomenal quarter last quarter, I don't expect it to go to the downside. If anything, it'll hover around this 25 area and consolidate further as people build positions over here. But I do expect a push up to 30s in the next month or so. Obviously, as I always mention, manage your own risk, do your own due diligence, and trade what you can afford. But more importantly, understand that everything I discuss is for educational purposes only and not to be construed as investment advice, obviously. Make your own decisions and do what you're comfortable with as well, right? But that being said, if we do get a push up to 30 area, a not so bad idea as well would be to trade the call spread. So as I mentioned, we have high short interest in the stock, right? I believe it's around 35% right now. And that could be a catalytic event toward an upside push. As we saw a couple of weeks ago, we saw it push up very abruptly. Let me find the chart again. So Rocket actually moved up. You can see over here that if you zoom in on the 1 month time frame, you can see we moved from 24.30 on March the 1st to a high of $43 on the 2nd, right? That was a massive short squeeze. Again, the volume here was higher than any day that Rocket's ever seen, right? You can see, for all of history, it's the highest volume day we've ever seen, right? And given that we still have high short interest, it's possible we see it push again up to that area once more on similar volume, right? So you want to be accumulating around this area 25-ish. Again, it could fall as low as 20 on a market pullback, but that would be a buying opportunity overall. Longer term, I expect this to trade between $30 and $50 a share. And that would probably be a new range overall. But I do expect another push up to the area of 35 to 40 in the next couple months or so, right? As I was saying, looking at the option chain, right? if you wanted to trade the stock itself using options, you could trade it with call spreads, right? So for example, let's say you wanted to go long on the 30, again, these are weird strikes because each strike adjusted for the dividend amount on Monday. So it was $1.11. So as you can see that each strike is incremented in dollar and then 89 cents. That's because each strike shaved off $1.11 from its previous strike. So for example, 31.89 used to be 33, right? So let's say, for example, you want to go long, a month out. Again, I think a month is too short a time frame if you want more assurance of a move to the upside. But right now, we don't have any OPEX for May, right? After Friday, which is the March monthly OPEX, at that point in time, the May contracts will start trading, right? So it might be wise to maybe wait till after Friday. But looking at even June, perhaps, right? June, if you were to buy the 31 equivalent contracts over here, right? Yeah, let me just discard this one sec. So if you were to buy these 31 strike perhaps, right? And then sell the 41 strike against that, you can see right here, the debit is only about $1.20 or so midpoint, right? So you're risking about $1.20 for maximum profit of $8.80. That's not too bad at all, right? And then your break even obviously is like 31 plus $1.20, so 32.20 roughly. And your maximum profit is achieved above 42, right? So Rocket's one that I'm looking at right now. I like it a lot. I own some stock in it right now, and I am bullish on it longer term. I like what they're doing with the company. Amazing cash flow, is very profitable right now. And I see that strengthening over time as more and more people go to automated lending services like Rocket Lending, for example, and using their phones and apps versus calling conventional lenders to borrow money, right? Next up, my other favorite position is Palantir, right? PLTR. So we can see that on the chart. One sec. See on the chart over here. One sec. Where is it? So we consolidated nicely in the 25 area. We hit a low, obviously, of 20 last Friday on that nice big market pullback, which was a great buy the dip opportunity for anyone that wanted to go long. If you did buy around there, congratulations, that was a great opportunity. And now we are pushing that area of 2746. If we break above that area and close above it this week, next up would be the 30 area, and then we can push back up to the 35, 37 area perhaps, and possibly challenge all-time highs again into the next earning report. There is a investor event again. I believe it's April the 14th, which is 2 days prior to April OPEX. So keep that in mind as well. The last time we had investor event was somewhere around here, where the stock price popped from 25 up to 45 in a matter of days. So keep that in mind as well. But looking at the stock, the options here, right? We can see that for this coming week, the expected move is about $2.50 or so in one direction. So upside of 29.50, downside of 24.50. I'm inclined to think we're going to see upside instead of downside here. But looking further out to the April 16th OPEX, which includes the demonstration they're going to be doing online, that gives us an expected move from the current price of around $6 in one direction. So upside of 33, downside of 21. Again, I'm inclined to think we're going to see an upside move to around 33, 35. And it can happen pretty fast as well, right? IV is pretty low right now, so options are relatively cheap on Palantir versus historically, right, which is the HV right here. But looking out to the May OPEX or even June OPEX, that's a better way to play it because you get an earning report prior to expiration as well. And you can see that we have an expected move by May OPEX of about $9 in one direction. So from the current price, upside 36, downside of 18. And again, I expect us to see upside versus downside. Any dips are good opportunities to go long on it. Obviously, manage your own risk. But looking out to May OPEX, you can see that there is some great asymmetry of risk to be had on spreads, right? So even right now, the 30 to the 40 call spreads, right? They cost about $1.85 right now, right? Just last week, they're trading for $1.20, right? Last Friday, when it was at 20 bucks, they were at about $1.05, right? So right now you're risking about 185, maximum profit 815, right? Not too shabby at all. You have about 4-to-1 risk reward or so. Maximum profit is above 40 bucks and break even is around 32, right? Alternatively, if you want to couple that with a cash secured put, perhaps, right? Let's say, for example, you're ultra bullish and you want to capture some premium on the upside as well, or be assigned some stock, perhaps, right? You could also sell a cash secured put at the 25 strike if you wanted to, for example. And that would mean that you're okay with buying the stock at 25 less, let's say 330, for example. So you'd be buying the stock effectively at 2170, right? But if you notice over here, if you combine the cash secured put with the call spread over here, the bull call spread over here, you have an actual credit of $1.40 or so, right? Which means that should Palantir stay between 25 and 30 come May OPEX, you make $1.50 no matter what, right? If it goes below 25, your break even pretty much would be 25 less, $1.50 or so. So 23.50 roughly. And obviously, if you went above 40, you'd make a maximum profit of $10 on your spread, plus your credit over here of $1.45, $1.50 or so, right? So not a bad way to play it overall, assuming you don't mind owning the stock at around 23.50. Again, if you don't do the spread itself, then you're owning the stock at around 21.70, right? So that would be the cash secured put on its own. But this is a kind of interesting bullish strategy if you are ultra bullish. But keep in mind, you want to have the cash available to buy 100 shares at 25 strike. So have 2.5K available to buy the stock itself, right? Don't use that capital and reduce your margin to nothing, because if it drops down fast, you could be margin called and then liquidated, right? So keep that in mind as well. Obviously, if you don't understand what I'm talking about here, don't even attempt to use a strategy whatsoever. Make sure you do your own research and understand what you're actually doing before you take a trade, right? Don't just watch a video and take a trade based on that video. It's a bad idea. It's a good way to lose money, right? Next up, looking at Aapl again, as we mentioned last week, it has not recovered at all really from its lows. Hit a low of 116 on Monday, I believe it was, right? So this past Monday, we hit a low of 116 or so. And it's only about $5 off that low right now. So some people are saying, you know, that they missed the boat on the bottom this past week. Well, I mean, you didn't miss the boat on the bottom because it's only $5 off the lows right now. So from the low to where it's at right now, it's only recovered roughly, what, like 4%? You could still see it possibly recover back up to highs again, 25%, right? So think longer term on Aapl, because again, if you pull a chart out longer term, like let's say 5 years out, you can see that any of these sharp dips we've had historically, right? Over here, over here, over here, over here, right? Any of these dips we've had, they've been great buying opportunities, right? And this right here is just one more opportunity to buy on a nice pullback prior to what should probably be a nice bull run into end of the year, right? So it's possible we see, 150, 160, even 170 by end of the year on Aapl stock, right? And the asymmetry of risk right here is very, very good overall. Obviously, it could fall down to 110 or 100 even on a broad market sell-off, but we've already seen it pull down to 116 or so, right? So it isn't that far-fetched. And if it were to pull back down there, it'd probably be very short-lived, right? So looking at Aapl's option chain here again, I mention the same thing every week because again, it's a very straightforward strategy. It's not very complex. Keep it simple on Aapl, right? If you want to own the stock, you can either buy the stock right now for about for 100 shares, about 12 grand US, right? Alternatively, if you want to buy an in the money contract, you could buy the $100 strike call options that expire 1 year from now, roughly January of next year, and those cost about $27 each. So your break even would be 127. So you're paying about $6 of extrinsic value. And again, if you want to shave off some of that premium risk, you could go long, for example, January, and look at perhaps April selling above your break even, which is a 130 strike. And again, over here, you're selling for about $2 a premium. That's a lot of time out, a month out overall. Aapl could recover much, much faster than that. But again, your break even is now 125. So if it hits 130 or so by the April OPEX, you're going to make $5 per contract profit overall. So you're making about 20% return in about a month, right? Not too shabby at all. That would be the way that I'd probably look at it. Alternatively, if you want to just trade options straight out of the money, probably use spreads on a bull case. I would go out further than April 16th, probably May or June even. Let's say you went to June, for example, you could go with the 130 calls and short the 150 calls perhaps. And in this case, you're risking about 360 or so max risk for a maximum profit of 20 wide minus 360, which is 1640, right? So you have greater than 4-to-1 risk reward. Break even is 130 plus 360, which is 130, 360. So not a bad trade at all over there. And again, if you want to couple that with a cash secured put, same kind of idea with Palantir, perhaps you could do the 100 strike on Aapl, right? Again, looking at the chart, you can see that Aapl hasn't really pulled back to 100 since we gapped up back in August when they announced the stock split, right? So now it's at 121 or so. If you don't mind owning it below 100, you still have cash that you put for June if you wanted to. It's a bit far out, so you won't see too much time decay right away. But again, if you wanted to own it at that price, you could do so, and you pull in about $2 here. That would also reduce your overall debit on the call spread over here from 360 down to $1.60 or so. So your break even would drop to about 130, 160, and then obviously if it stays between 130 and 100 come expiration, your maximum loss is $1.60, right? So not too bad overall. I like the longer term strategy on Aapl because again, it could be a slow mover, but we've seen that time and time again, the dips that are bought on Aapl provide fruit for those who are patient, right? So again, patience is the name of the game. If you want to rush in and try and make trades and make a buck here and a buck there, this isn't an idea for you, right? Remember that more money is made long term than it is short term, right? It's fun making money each day and seeing that P&L in your account go up, but in the long run, you're going to see the massive P&L if you're holding positions that last longer, right? It's kind of like if you bought Amazon in 2008 or 09 for around $50 a share, right? And you sold it for $100 a share. Great, you made 100% return. But if you had bought back then and held till now, you're up about 60 times your money, right? So that's not too bad at all either, right? It's actually much better than you would have fared doubling your money in a short time span, right? So again, first rule of risk management is only investing what you can afford to lose. That's why if you want to take long-term investments, you put money away that you don't care about, that you don't even think about at all because you don't need it for living or for paying bills or whatever, right? And that money can then grow and provide fruit later on, right? So that's an idea on Aapl. Otherwise, Blackberry had a great week as well last week too. They closed at around $12 on Friday, had a nice push up, and they report earnings not this week, but I believe it's next week. Let me just check that one sec, just to confirm. So Blackberry reports on, last report was December 17th, so it should be around the week of the 22nd, I believe, right? So right now we've seen Blackberry short squeeze up with GME, AMC, and Nokia a few months ago when it popped to almost $30. But right now it's at $12 now. And if we zoom in on the chart, it's approaching that previous high of around 14, right? So let's zoom in again on the 1-year chart. We can see that prior to this massive pop over here, it's trading not too far from the high area of around 13, $14, right? And if we push 15 prior to earnings, which are not this week but next week, and they have a good report, it's possible we see a 15 to 1750 area. Again, I don't think it's going to be a short squeeze candidate because there isn't that much short interest on Blackberry right now. But I'm more bullish on this longer term on the thesis of Internet of Things as they partner up with Amazon to work on self-driving vehicles. And they're trying to focus on other initiatives around IoT, right? Internet of Things as well, right? So long term, this could be a great bull thesis to trade on. And they're currently worth only about $6 billion, with $1 billion in revenues, so trading at a price of sales of about 6. But if they manage to ramp up revenues to say 1.5 or 2 billion, all of a sudden they're trading at a price of sales of 3, right? That means that they could trade easily at a PS of 10, which would mean that they trade at roughly a valuation from the current price of about 4 times the current price, so roughly $44 a share. I'm not saying that's going to happen, right away, but down the road, maybe 1-2 years away, that could be a viable thesis overall, right? So just an idea on Blackberry over here. Looking at the option chain, we can see that Blackberry for April OPEX, which factors in their earning report, right? Their expected move now is about $4 in one direction, so upside 16, downside 8, right? And again, if you want some good asymmetry of risk, you might want to just buy the stock and hang on to it longer term and sell cover calls if you want to reduce your cost basis over time. But if you want to also take some trades and maybe take a little bit of risk as well on a bull thesis in the short term, you could too, right? Again, I don't like shorter term expirations below 30 days or so, but a month out factoring in earnings. Let's say perhaps you went to the 12 strikes or at the money calls and you sold out of the monies at around the 17 strike over here, right? So now you're risking about $1.05 or so, maybe $1.07. So your break even would be $13.07, and your maximum profit would be 5 minus $1.07, so $3.93, right? Not too bad, about 4-to-1 risk reward, and your maximum profit occurs above 17, right? Alternatively, If you want to own it longer term, you can sell cash secured puts on it, given that's a cheap stock. Margin requirements are much lower. So if you're selling, for example, a $10 put option here, you're collecting about 94 cents in the span of a month, which is 94 cents return, 0.94, divided by risk of $9.06, right? So you're making a return of 10.4% in 1 month if it stays above 10 bucks, right? Not too bad either. Just some food for thought, obviously. Lastly, we'll discuss AMD, and then we'll go to SPY, and then we'll do some Q&A, all right? So AMD had a nice run last week as well, closed above 80 bucks as expected, and they've held that 75 area pretty consistently for the past few months, right? I kept mentioning it for the past few months that 75 is a great area to buy. Obviously, 85 was the first level support that cracked over here. Next level was 75, and then following that would have been 60 area. But that held pretty strongly on last Friday and then Monday as well. We dipped below it, but it bounced right back up and recovered right above it. And I do think that AMD is going to do very, very well long term. I expect it to hit roughly 120 or so by end of the year. Obviously, manage your own risk and do your own research. Don't take my word for it, right? I'm just spitting ideas here. If you want to trade it as well, looking at the option chain, we can see that the expected moves on AMD for the month ahead are about $9 or so in one direction, right? So upside from the current price would be around 90, downside would be around 72 or so, right? But given that strong support at 75, I'm inclined to think we'll stay above 75 for at least the next few months, unless we see a broad market pullback. But given that we have stimulus checks going out this past weekend, this week as well, it's more likely we're going to see some more bullish movement in the broad markets as well, right? The dip was pretty sharp on AMD. It fell from 95 or so when they reported earnings a couple months ago. So they reported over here. They were at 94.22 on February 12th, right? They fell from there down to a low of 74 or so. So about 22% decline, right? Think of that as a discount on a nice long-term investment right there, right? And now they're already up from that bottom about 9.6%, right? So not too bad overall, but I do think that we're going to see some nice upside in AMD, given that if you look at AMD versus NVIDIA, so just for comparison's sake, AMD is worth about $100 billion, doing about 10 billion in sales, profit of 2.5 billion. NVIDIA, which is a competitor, is worth $322 billion, so about 3.22 times the valuation. They're doing 16.68 billion in sales, so about 68% more sales. And they're doing net income or profit of 4.33 billion. So they're trading at more than 3 times the valuation. More than 3x the valuation right now. Yet their sales are less than double right now, and their profit is less than double as well, right? So I think that either NVIDIA is very overvalued or AMD is very undervalued right here. I'm inclined to think the latter, where you're going to see AMD push a valuation of around 120 billion, which means that they have upside of about 20% from the current price. Current price is 81 bucks. So 81 times 1.2 is 97.20 or so. So right around the 100 area in the shorter term. But again, if they keep performing well and growing their revenues quarter after quarter, you're going to see them probably push 120 by end of the year, right? So think longer term. Don't be short-sighted and miss out on these great opportunities that come about once in a while in the market. And we'll look at SPY now as well. So SPY. So let me just remove these lines over here, right? So we had a nice pullback down to the 370 area almost this past week. And since then, we've pushed back up to all-time highs again. So again, pretty bullish overall. We didn't get the pullback that I expected down to the 360, 350 area. And given that we had a stimulus bill pass now, and we see rotation back into tech now from financials and energy, perhaps, we could see 400 or so in the cards in the next little while. I would be cautious regardless, just because, again, as we get these new all-time highs, it is possible we pull back down again. But this pattern formation right here of a tweezer bottom with 2 nice fat wicks on the downside, I'll zoom in here so you guys can see. So 2 fat wicks over here. That leads me to believe we're going to see upside before downside again, right? So possibly push to around 400 or so on SPY, maybe even 405 before we take a breather again. And then that will lead us back into probably earnings season for Q2, right? Triple Q's also had a bad week, but then recovered in a week as well. So you can see that they pulled back last week down. They're down about 8% from the week prior. And actually, one sec. Here's the weekly chart. Let me just pull it up on the calendar right here. So you can see over here that pulled from all-time highs down about 12% or so week over week. And this week we actually pushed back up again, and we're seeing a similar formation over here with 2 nice wicks on the downside. So probably saw the bottom there as we saw support on Apple, Amazon, Microsoft, Salesforce, AMD, Nvidia, what else? Facebook. So key support levels were held, and that leads me to believe that we're going to see some upside in tech now in the next month or so. I'll stop it here recording wise, and then we'll do some Q&A, guys. If you have any questions or comments, please post them below. Appreciate you sharing the video and liking it, obviously. And if you find value in these videos, subscribe as well, right? I'm going to stop recording right now, and then we'll do some Q&A. So